Are you tired of the same old investment advice? Do you want to supercharge your portfolio and earn that passive income? Well, look no further, because in today's video, I'm going to give you my 5 ultimate dividend stocks that will put your money to work while you sip your morning coffee. And stay tuned for the entire video, because these stocks aren't just your ordinary dividend stocks, which you're about to see. These are hidden gems that have the power to transform your financial future. And you'll know exactly what I mean as we uncover these 5 dividend stocks. So if you're ready to dive in, make sure you hit that subscribe button and let's embark on this wealth building journey together. Because I firmly believe financial independence is within reach. You just have to make your money work as hard as you do. So don't forget to hit that like, share, and thanks button on the bottom of this video. Leave your comments because I want to answer your questions down below. For this pick, I'm looking at a stock that's been flying under the radar but packs a powerful punch, and that stock is Jamieson Wellness, ticker symbol JWEL. Jamieson develops, manufactures, and distributes natural health products. Think of your vitamins, supplements, and all things wellness. Why is this relevant? Because when it comes to economic downturns, people still want their daily dose of health. And that is the key, because that is recession-resistant gold right there. And the beauty about Jamieson Wellness, it's not about stability, it is a growth machine. Since going public back in 2017, Jamieson has been flexing its muscle. Every year, its normalized EPS has been on the rise. And guess what? It's not just a Canadian thing either. Jamieson is spreading its wings globally. International markets, check. Over 40% of branded revenue is now coming from outside of Canada, which is more than double compared to 3 years ago, showcasing that their diversification strategy works and it is immensely successful. Because how many vitamins can you sell to the Canadian market? There's a limit to it. But if you expand internationally to the US, there's a whole host of people out there that want that nutrients, they want those supplements, they want that wellness, and that's the key to Jamieson's strategy. Now here's where dividend investors really get interested. Now, it's not a massive yielding dividend stock, but it quietly delivers. The current yield for Jamieson is roughly around 2.9% right now. Now, it's not jaw-dropping, but keep in mind, this is a growth stock as well as a dividend stock. So you actually get the best of both worlds. And the best part is that Jamieson has been consistently increasing their dividends. It's like a slow-burning dividend rocket, and in their last quarterly results, they continue to deliver on growth and expansion. Jamieson Wellness reported a profitable revenue growth of 23.5% in 2023, marking a successful execution of their global strategy, with Canadian consumer consumption hitting record levels in Q4 2023. In a nutshell, Jamieson is that hidden gem that you want on your portfolio. Stability, growth, dividends, everything with a price tag that will make you smile. Now, there's one thing to just talk about dividend stocks and run through my spiel, but let me show you how I actually run a due diligence on a particular stock right now. So this is my spreadsheet that I've built from the ground up to let me focus on some of the key aspects of a stock from a dividend investor point of view. So for example, with Jamieson Wellness, I have the ticker symbol right here. It's currently trading around $26 per share. And I can see right now it's trending just between its 52-week high and 52-week low, between $34 and $22. And in its last quarter, the dividend was 19 cents per unit. And I can also see some interesting stats like it has over 1,200 employees worldwide, a market capitalization of over $1 billion. The PE is at 23.63. Now, on a daily basis, roughly 160,000 shares are sold and bought on the TSX. And like I said, it's been around since 2017. And I have some dividend dates so I can track its dividend history, along with what it has been paying for its cash dividend amount. What I can do with this spreadsheet is that if I only have $1,000 to put down on this one stock, that lets me know I can get 38 shares, meaning at its current dividend rate, that translates to a quarterly dividend of $7.22 with a yield of just under 3%. But here's the beauty right here, that monster dividend growth rate of over 15%. And as you can see, that dividend has been growing consistently since 2017, since it IPO'd. It's been consistently rising. And that's what I mean. Don't just look at the initial yield and pass over the stock, because right here, this is what I mean. Some of the hidden stats, you have to do your due diligence and really uncover what does it all mean. In terms of its payout schedule, you get paid every March June, September, and December of each year. You don't have $1,000 and you want to put a little bit more down. You want to put down, let's say, $5,000. That translates to 190 shares of Jamieson Wellness I can add to my portfolio with a quarterly dividend of $36. And if you're a high roller and want to put down $10,000 into the stock, that gets you 381 shares and roughly $72 you'll get every quarter, March, June, September, and December. And don't forget, this only goes up as Jamieson Wellness or any other stock raises their payout. So I can use the spreadsheet to really figure out how much quarterly dividend am I trying to extract from this particular dividend and how much do I need to put down in order to hit my target quarterly dividend. My next pick is one that I'm really excited about. It's a super exciting business case, and if you are a dividend investor, I want you to pay real close attention to this particular stock, and that stock is Sleep Country Canada, ticker symbol ZZZ. Sleep Country is Canada's leading omni-channel specialty sleep retailer, and they have been in the game for nearly 3 decades, and their commitment to providing Canadians with a better night's sleep is unparalleled. Now here's where things get interesting. Sleep Country recently acquired 100% ownership of the Canadian assets of Casper Sleep Incorporated, the original disruptor of the mattress industry in North America. Sleep Country paid nearly $20.6 million US for Casper's Canadian operations, but that's not all. They also received a $4.5 million marketing transition fee from Casper over the next 4 years. That's such a really good deal because if you think about it, you're investing into a market disruptor. Casper has been changing the sleep industry for a while since they hit the market. And by acquiring Casper to the arsenal that is Sleep Country Canada, they can offer Canadians more value, more options when it comes to their sleep options. So let's think about this a little bit further. Why is this acquisition a really smart move? Well, Casper invested over $1 billion globally to build a leading brand that elevated the importance of a good night's sleep. And guess what? That omni-channel strategy perfectly aligns with what Sleep Country Canada is trying to do in general. So it just makes sense to merge the two together. Now let's talk dividends because that's why you're watching this video. Sleep Country Canada has a tremendous track record of delivering dividends and growing dividends. And with this acquisition, they're poised to strengthen their portfolio even further because Casper is a globally recognized brand in sleep. And the more revenue that they generate because of this acquisition, part of Sleep Country Canada, that means more money can go out to shareholders like you and I who are investors or potential investors in Sleep Country Canada. If you're not convinced of Sleep Country Canada, keep in mind, it's not just about mattresses anymore. It's about building a legacy on a better night's sleep. And that means something because at the end of the day, everyone needs a good night's sleep so they can tackle whatever is yet to come during the next day. And as they continue executing and delivering on their long-term strategy, I'm excited to be part of that journey as a dividend investor. Simply put, why buy a mattress anywhere else? So let's take a look at my due diligence and what are some of the key metrics that I'm tracking for Sleep Country Canada. So here we have the ticker symbol. It's trading right now at $29.33. And here's the thing, it's actually trading closer to its 52-week high, meaning it is showing you that growth, that sleep is important, that acquisition is important. It's all heading in the right direction. The last dividend was 24 cents per share, and they have close to 1,700 employees with a market capitalization of just under $1 billion, a PE of 14.4, and roughly 80,000 shares are traded on the TSX every day, and they have been incorporated in 2015, even though their business has been privately operating for nearly 3 decades. And over here you can see various dividend payout dates that I've been tracking since 2015 for this particular stock. Dividend has grown from 13 cents all the way to 24 cents where it is today. So that means if I put down $1,000 into this option of Sleep Country Canada, that gets me 34 shares, and that's a quarterly dividend of $8 paid out February, May, August, and November. The yield is just over 3% at 3.22%, and that dividend growth rate is 7.8%. As you can see, it has been growing its dividends consistently since 2015. There was a bit of a lull in 2020, 2021 because of COVID, but since that subsided, it has been back on its track record of delivering dividend growth, and that's exactly what you want to see as a dividend investor. What does that dividend history look like? Have they paused their dividend? Have they cut their dividend? Is that dividend growing? And most importantly, make sure you calculate that dividend growth rate because you don't just look at the yield in isolation. That dividend growth rate will give you a sense of how much can you expect that dividend to grow in the years to come. My fellow investors, as we consider the dividends of Sleep Country Canada as part of that commitment and legacy to create a better night's sleep, let's acknowledge the daily dividends of having luxury in our lives. And a big shout out to Dossier for sponsoring this segment of my video. They are known for crafting premium scents inspired by some of the most iconic brands in fragrances like Tom Ford, Jo Malone, Chanel, YSL, and that list goes on, but without that luxury price tag. Investing is all about making smart choices with your money for growth and stability, and Dossier perfectly aligns with this philosophy. They offer a savvy investment for your senses with scents that not only resonate with your style, but also represent your personal brand. As you diversify your portfolio for the best returns, consider diversifying your scents profile with Dossier's exceptional collection. It's an investment in yourself that makes sense and sense. And if you want to know what I'm rocking for one of my daily go-tos, it is this Fugre Oud inspired by oud wood with original retails for over $400. I'm going to show this to you if you can get a sense of what that looks like. And I can tell you right now that ever since I started using this, I can't tell the difference between this and the original. They're so close together. But what I do notice is that I'm not spending $400 on the original, and I can spend $50, $60 on an alternative that smells just as nice. At the end of the day, it's about that feel of luxury without having to pay that luxurious price tag. To me, is a smart option. For my next pick, I'm highlighting a gem that's deeply embedded in the energy sector, and that name is Tourmaline Oil Corp, ticker symbol TOU. Tourmaline Oil Corp stands out as one of Canada's top energy producers. But here's a twist. Despite a strong position, the stock has seen a bit of a downturn the last 6 months, and the culprit is lower natural gas prices. Now, you might be thinking, well, that's a bit of a red flag. Why would I be investing in an energy company when gas prices are falling? But there's more to the story when it comes to Tourmaline. Even in these challenging times, Tourmaline is pulling through with some solid cash flow. And it's all thanks to its access to some of the world's most lucrative energy markets. And it doesn't stop there. Tourmaline also has an ace in the hole, and that is its low-cost, long-life assets. This isn't just about weathering the storm, it's about thriving in it, maintaining profitability while others struggle, and that's where Tourmaline's operating model really stands out from the crowd. And what about the shareholders? Well, Tourmaline does not forget its shareholders. It last increased its dividend by 7% to right now paying 30 cents per quarter per share. And that's on top of a generous special dividend. It doesn't just pay the special dividend every now and then. It has become a common recurring theme where you get a quarterly dividend and a special dividend just to sweeten the deal. The stock is trading at a price to earnings ratio of just 9 times. With natural gas prices at a low, savvy investors see this as a prime time to invest in a high-quality, well-managed energy behemoth. So if you're looking for a resilient, well-defensive, strong asset that has been known to produce dividends, not just on a quarterly basis, but also special dividends to sweeten that deal, and right now it seems to be that prime time because of the spot we're in because of natural energy prices. So if you're looking for a resilient pick to add to your portfolio, this might be the opportunity you have been waiting for. Don't miss out on the chance to invest in a company that's not only committed to its own success, but to the success of its shareholders. And now let's take a look at how I'm personally tracking Tourmaline Oil Corp in my due diligence. So here I have the Dividend Stock, TOU, and right now it's trading around $62 per share. And that is right in between the 52-week low and the 52-week high. The dividend, like I mentioned, is 30 cents per share. It has just under 400 employees with a market capitalization of close to $22 billion. And if we look to the right, we can see the dividend history that I've been tracking since 2018. It started off at 8 cents way back when, and that has only grown. Went from 8 cents 2018, 9, 10, and it has quickly gone up. And we can see that in its dividend growth rate. It has a monster dividend growth rate of 25%. Meaning, if you have $5,000, that gets you 80 shares and a $24 quarterly dividend. Even though it's a low yield, but that's the point we're talking that it's growing not only in capital appreciation, it's giving dividends. So shareholders get to benefit from a two-pronged approach in capital appreciation, which is important from a growth stock perspective, but also through a dividend growth perspective. And take a look at this chart. You can see it has been aggressively growing that dividend continuously. And the payout schedule is that you get paid every March, June, September, and December of each year. And for my next pick, I'm zooming in on a company that's been making waves in the healthcare logistics space, and that is Andlauer Healthcare Group, ticker symbol AND. With a market capitalization of around $1.6 billion, Andlauer is not just any supply chain management company, it is a specialized provider of third-party logistics and transportation solutions catered for the healthcare industry across North America. And what sets them apart from their competitors? Well, it's really that comprehensive suite of services, from client integration to inventory management and from distribution to warehousing. They've pretty much got this healthcare sector covered from all sides of logistics. And that's what you want to see when you're investing in a company. What sets them apart? What advantages do they have in their service offerings or their pricing that really sets them apart or creates that moat around them from their competitors? Let's talk performance. In Q4 2023, they reported a revenue of $169 million, which was about a 2% increase over last year. Their operating income is solid $28 million. But the real highlight over here, and that's where you have to dig through the financials to really uncover what metrics are you really looking for as part of your due diligence. In this case, the adjusted EBITDA was $44.8 million, boasting a margin, an adjusted EBITDA margin of 26.5%. That's an amazing margin in this space. And the reason I'm looking at this margin, because as the margin expands, as they grow their services, all that extra cash, what does that mean for dividend investors? All that extra cash goes to shareholders like you and I, which is in the form of dividends, but growing dividends. Now, let's get to the part where dividend investors love. And what is a dividend looking like? Well, they are not shy about sharing that success with their shareholders, like I said. They offer a quarterly dividend of 9 cents per share, and get this, those dividends have nearly doubled over the last 4 years. Andlauer stands as a testament to value and growth. And that's the sweet spot where I love as a dividend investor. Where am I getting that value from? Where am I getting that growth from? I'm not necessarily looking for the highest yielding stock. I'm looking for a good yield, but also growth, because I want that dividend to grow. I'm not going to be happy if I'm just getting the same dividend quarter after quarter for the next so many years. I want that dividend to grow. That's important to me. If you're a dividend investor who's looking for growth, value, and dividends, this might be the perfect time to consider Andlauer for your portfolio. You get access to the healthcare sector, the logistics sector in one combined unique package. Now let's take a look at some of those stats that I've been tracking for this company. And you can see the current price at $43 per share. It's trading roughly between the 52-week low and 52-week high. It's paying that 10 cent per dividend, has close to 2,300 employees worldwide, and a market capitalization of close to $1.8 billion. And it's been around since 2019, so it's a fairly new company on the TSX. And as you can see, I've been tracking their dividend history since 2020. What started off as 5 cents has now become 10 cents. And that dividend has been growing relatively consistently since around 2021. And you can see those spikes. What that translates to is close to a 19% dividend growth rate. If you have $1,000 to put down on this stock, that'll get you about 23 shares at the current price, a quarterly dividend of $2.30. Not life-changing because it's a yield of less than 1%. But in this case, I'm really looking at that 19% dividend growth rate, because as they continue to do well, they continue to share that success with the shareholders, this dividend should continue to grow as it's done so far. That gets paid out January, April, July, and October of each year. My next pick is a deep dive into one of the largest real estate investment trusts, also known as REITs, in Canada, and that name is RioCan, ticker symbol REI.UN. Now, RioCan has been around for a very long time, and if you've been following the office space in terms of vacancies, we know that Toronto, Vancouver, and other major markets, the vacancies are at an all-time low, meaning not a lot of people are working in the office when they can work from home or even on a hybrid schedule. So there is just less demand for office space. So if there's less demand for office space, why am I talking about a stock that's in this space? And I'm going to tell you why dividend investors have recently flocked back into RioCan. In its 2023 earnings report, they showed a remarkable turnaround signaling a strong recovery and a promising future for income-focused portfolios. Now, with a history of consistent distributions, RioCan has demonstrated a commitment to returning value to shareholders, making it an attractive option still for those seeking a steady income. The REIT's financial resilience is evident from its robust earnings, and you can see a notable increase from FFO, which stands for Funds from Operation, which allows for a 2.8% increase in annualized distributions. Where other REITs in the space are cutting, RioCan is growing. That's what really sets it apart, and that's why different investors are not coming back to focus on RioCan, because while other REITs are struggling with cash flows with high interest, and they have to cut their dividends by 50%, 60%, or even cut it altogether, RioCan is on the opposite end. They're doing really well. They have turned around their business. They're at a point where they're not just maintaining that steady income, they're able to grow their distribution. And because of this turnaround story, it has increased investor confidence in RioCan. Analysts are now optimistic about RioCan's trajectory, citing its quality portfolio and strategic tenant mix as key drivers for sustained growth. So if you are a dividend investor building out a portfolio, to me, RioCan is a still foundational cornerstone that should be part of portfolios, because one, it offers diversification in real estate. It's now looking at other options to diversify among the real estate sector. Now let me show you some of these stats that I've been following on RioCan. I have the ticker right here, REI.UI. It's currently trading around $18 a share, and that dividend is now just over 9 cents per share. And if you take a look at their history, you can see that it started off at 8 cents back in 2021, 8.5, 9, and now it's at 9.25. And that's important for a company that's facing tough times. Can they adapt to challenging or shifting economics? And clearly, RioCan can. So if you have $1,000 to put down in this company, that gets you 54 shares, and a monthly, again, this is a monthly dividend of $5. So that means per year you're making about $60 on your $1,000 investment. That's a yield of 6% and a dividend growth of 4%. So if I had to summarize all 5 of these picks in a nutshell, what does that look like? Well, that's where I'm looking at this table. I have the prices listed over here. I have the dividend, where most of it's quarterly, except for RioCan, which is monthly. I have their dividend yield, their dividend growth, and you can see when they get paid. So, for example, RioCan is monthly. Some others are on a different schedule, March, June, September, December, or something like a January, April, July, October, so on. What's really cool is that you can see that there is a mix of yield and growth. So, for example, if you're looking at Sleep Country, it has a yield of over 3%, but a dividend growth rate of just under 8%. But if you're looking for maximum growth and still a decent yield, that's where, to me, ProLane stands out from the crowd, because you're still getting a 2% yield. Again, 2% yield on its quarterly dividend, not including the special dividend, which has become a recurring theme. And on top of that amazing yield, you're still getting a very nice dividend growth rate. And when we look at RioCan, on the other hand, it has the highest yield among the crowd, but the lowest dividend growth rate. So it really depends on what stage you are at in terms of your investing journey, because not every investor is going to be the same. Some may prefer a more tilt towards a higher yield and lower dividend growth rate, whereas some may prefer a higher dividend growth rate versus a lower yield. What you really want to focus on are the important metrics. What is the yield? What is the historical dividends like? What is the future dividend growth rate? What is the adjusted EBITDA margin? What is free cash flow? Those are the metrics you really want to focus in on, among others, as you do your due diligence on any dividend stock. Don't just take my word for it. Don't just take the word of any random analyst. Please be sure to do your own due diligence. Thank you so much for watching. That's all for this video. Make sure to check us out on the links in the description below. I have some links that you may find helpful, whether you are a starting investor, an experienced investor. I have some spreadsheets that I've built that you can download. I have some custom offers for you to check out. And last but not least, please make sure to hit that like button, subscribe, hit that bell notification icon so you don't miss out on future videos, and leave a thanks if you've enjoyed this video. That's it for now. I'll talk to you in the next one.